So, good evening, everyone. My name is Maurya Hanspal, and today we're going to talk about one of the most important concepts in our fundamental analysis series, that is the concept of the valuation. What exactly do we mean by the valuation? How to value a company? What are the most important factors affecting the valuation of a company? And how to, in reality, analyze or evaluate the company in real. Let's take a few examples. Like, for example, if you buy a commodity for 20 rupees and the value or the benefit or the satisfaction you derive from the commodity is more than 20 rupees, then it's a good commodity, right? But having the same example, you bought the commodity or the good or maybe an item for 20 rupees, but that turned out to be useless. That is, the benefit was only of 2 rupees or 5 rupees. Then that commodity is just worthless. So this was the basic terminology in case of marketing. And we can say that price is what we pay and the value is what we get. So talking about the field of valuation in financial context, why we need to value the company and what is the need of valuation of company in stock markets in finance. Let me take a simple example. For example, through all the analysis, through all the valuation techniques or the complex techniques that we use to value a company, the market price of a company came out to be 2000 rupees. Or, for the sake of quite simplicity, the market price of that particular stock of the company, it came out to be like 2000 rupees. But like when you went to the market, the stock price was trading at 4000 rupees or 5000 rupees. Again, through all your analysis, all your complex mathematical tools and financial tools, you arrived at the value of 2000 rupees, and that was the fair market value of the company. And the main purpose of the valuation is to have the fair market value of the company. But when you went to the market, the same share was being traded at 4000 rupees or 5000 rupees. Would you go and buy the share of that company? Absolutely not. The company is being traded at a higher value. The share is overvalued. At some point of time, like within the market limelight, the share price would come down to around 2000 rupees. And if you are buying that share right now at 4000 rupees, you might incur a substantial loss. Case number two, all your valuation techniques and the complex techniques gave you the value of 2000 rupees, the fair market value of the stock of the company. But when you went to the market, the price of that particular share was 1500 or 500 or 1000 rupees. At this stage, the company is being undervalued, but you need to see the potential of that company. Does the company has enough potential to go to 2000 rupees or not? It does not mean that you pick up any undervalued company just for the sake that it is undervalued and at a certain point of time the price would go to 2000 rupees. You need to see the value for that company, and if you really think the company has a good sustainable future ahead and can touch that benchmark of 2000 rupees, you should buy that company and you will earn a huge amount of profits, as taught by the marketing guru Mr. Warren Buffett in his value investing strategy. So, what he says, buys the undervalued stocks in order to gain a profit, because at certain point of time the market would recognize value in those stocks and the stocks would do well. But Warren Buffett did not say कि pick up any kind of stocks. उन्होंने like ये नहीं बोला था कि मार्केट में कोई भी स्टॉक खरीद लो, undervalued कोई भी स्टॉक खरीद लो. He said buy those companies which has value. His value investing strategy says to buy undervalued companies which have value. Okay. And that is why when the market broke off in past 4 to 5 weeks, when it crossed like 60,000 levels and it came back to around like 57,000 or 58,000, apart from the concerns of Omicron, the one most important reason was the higher valuations as well. Because at a certain point of time, the market would come down at the original valuations. So buy those companies and go for those companies which though are undervalued but have a good potential. I'm not saying you to not to go for the companies who are at fair value. Okay, go for those companies as well, but see whether that company can create a future value or not. Sustainability है या नहीं है. तो मार्केट में जाके कुछ भी मत खरीदो. Try to analyze the company and value the company. So I'll be talking about first a few of the ratios which are quite common for the purpose of valuation of the company. So talking about the earnings per share, EPS. EPS is the indicator of the growth of the company or the profitability of the company. Okay. As the formula basically says, your net income minus the preferred dividends. That is, out of your EBIT, like which we talked in the previous sessions, earnings before interest and tax, you are subtracting the interest payments, you are subtracting the taxations, and after that, you are subtracting the preferred dividends. And after that, you get the earnings available to common shareholders, EACS. Earnings available to common shareholders. And you are dividing it by the number of outstanding shares, freely floating shares, which we talked in the previous session. So that was important. Okay. So talking about this indicator shows the growth of the company or the earning potential of the company, right? Higher the EPS, it is good for the company. It says that the company is earning well. The company is providing more to its shareholders. Or in simple terms, the company is providing more income as or on the basis of the outstanding shares of the company. Per share, the company is earning well. Per share, the value of the company is great. Higher the EPS, it is better for the company. Talking about the price earning ratio. So when we talk about the PE ratio or the price earning ratio, it is one of the most common ratios that are used in this analysis. Okay. So PE ratio, as the formula states, your share price upon the EPS. PE ratio is one of the most used indicators for the valuation of a company. People say PE ratio helps to tell you how much the investor is willing to give that company to buy that particular share of that company. मतलब as an ideal investor, मैं उस particular company के शेयर को खरीदने के लिए कितना देने को तैयार हूं. How much I am willing to pay for that particular share of that company. Take a simple example. If the price of the share is 150 rupees, EPS is 10, your PE comes out to be 15. It means I'm ready to pay 15 times more premium for that company, right? Now, a lot of people say that the PE ratio should be as low as possible. And I'm repeating it once again. A large number of people say that PE ratio should be as low as possible. And why they want the ratio to be as low as possible? And mathematically, when the ratio would be low, when your denominator would be high, right? They want the EPS to be of the company to be as high as possible and share price to be quite low, right? If we take it from the investor's point of view, if the EPS is very high and the share price of the company is very low, so we can say that the company is undervalued and the company has a future value, right? So in that case, we can say that the investors are right. Having a higher EPS and a low share price, it means the company is undervalued, right? But in the other case, if the PE ratio tends to be higher, it means EPS is low, but the share price is high, right? So in that case, we can say the company is overvalued, but not always. It can also happen that the share price is high, not particularly because of the earnings, because the earnings are taken into consideration only with respect to the profitability of the company. It might happen that the company has a lot of free cash flows. It might happen that the company has a lot of growth prospects. The company might be working on a new theme. कंपनी ने बहुत सारा पैसा कहीं और लगा दिया, मे बी फॉर द थीम ऑफ ईवीज, फॉर द रिन्यूएबल पावर, हाइड्रो इलेक्ट्रिसिटी. So we need to take into consideration all these factors and do not say blindly कि अगर PE कम है, the company is undervalued, buy it. PE ज़्यादा है, the company is overvalued, sell it. Try to analyze various other factors as well. So I would not like comment on this कि PE ratio ज़्यादा होना चाहिए या कम, because I believe in analyzing the company and the future prospects in detail. Then I took just four scenarios. The first scenario had a low PE and low growth, so that's the worst scenario. The second scenario is high growth and high PE, the best scenario. The third scenario is the low PE and negative growth, सबसे खराब scenario. And the fourth, we have the moderate PE and high growth. PE is growing at a moderate rate, but the growth is very high. This happens in case of cyclical industries, be it your like cement industries or real estate industries or heavy industries. We can invest in cyclical industries, but with a certain caution. Because if you take the example of real estate industry, the industry was stagnant for the past 8 to 10 years in a phase of consolidation. And abhi recently the industry has started to boom. So make note of this thing. Talking about the price to book value ratio. So before coming to price to book value ratio, I would like to insist on one more point. This PE ratio can be used for any kind of companies. Asset intensive, IT companies, it is applicable for all kinds of companies. Be it your EPS or be it your price earning ratios. But make note of one thing. In order to have these ratios, the company must have a profitability. अगर losses हैं तो ये ratios तुम calculate नहीं कर सकते, as we are seeing in the case of IPOs, and IPOs की बात हम करेंगे in the next week का session. Okay. Price to book value. Market price per share by the book value per share. So it basically says that cash share price, that is, are the assets of the company, which is nothing but the book value of the company. The assets of the company, are they supporting the share price of the company or not? कहीं ऐसा तो नहीं है कि शेयर प्राइस बहुत ही ज्यादा है एंड जो एसेट्स हैं कंपनी के पास वो बहुत ही कम है. सो इन दैट केस द कंपनी वुड बी ओवर वैल्यूड. It can also be the reverse scenario. The assets that the company possesses is so high, but the price at which the company is being traded in the market is too low. In such a case, the company is undervalued. So we need to have this scenario. Okay, again, it tells you how much premium you are ready to pay for that company. And price to book value ratio is majorly used for those industries who have a book value, that is, who have assets, plant, machinery. So they can be used in cyclical industries, cement and real estate and manufacturing. All these industries use the PB ratio. In case of IT industry, PB ratio might not be so useful because mostly they have their softwares and all that stuff IT में, and assets इतने नहीं होते. Okay. Price to cash flow ratio. The most important ratio which I believe. Let me take a simple example. The net profit that the company would show, right? The net profit that the company shows in its annual reports is not the actual amount that the company has received. A classic simple example. If I have bought something for 20 rupees and sold it for 40 rupees, I earned a profit of 20 rupees. Simple profit, sales price minus the cost price. But that 20 rupees is my profit. That 20 rupees would be shown in my P&L statement, irrespective of the fact कि 20 मुझे cash in hand मिला है या नहीं. It can happen that that person turns my debtor. वो मुझको बोले, मतलब कि profit तो मुझको हुआ है, agreed. But वो person मुझको बोले that 20 rupees I will pay you back in 2 days, in 1 month or next year. Okay. So what 20 rupees I will still show because that is my प्रॉफिट एंड लॉस स्टेटमेंट, चाहे मुझे कैश मिला हो या ना मिला हो. बट फ्री कैश फ्लोज वो 20 रुपीज तभी शो करेंगे जब एक्चुअल 20 मुझे मिलेगा. 1 साल बाद मिले, 2 साल बाद मिले, 3 साल बाद मिले. दिस इज हाउ कंपनीज कैन मैनिपुलेट देयर स्टेटमेंट्स. सो नॉट ओनली लुक एट द प्रॉफिट, लुक एट द फ्री कैश फ्लोज ऑल्सो. एंड फ्री कैश फ्लोज कैसे निकालते हैं? वी डिड इट इन द एनुअल रिपोर्ट सेशन. दैट इज अ फंडामेंटल एनालिसिस सेशन 1. यू कैन गो एंड सी दैट यूट्यूब लाइव. ओके. So price to cash flow ratio is basically says because share price company का बढ़ रहा है, so it should have positive cash flows with it. This operating cash flow can also be exchanged with the free cash flows. Okay, तो अगर share price बहुत ही ज़्यादा है and free cash flows are too less, it means the company is overvalued. But if the share price is too low and the free cash flows that the company has is too high, it means the company is undervalued by that company. So you need to see the free cash flows. Okay. I have taken a simple example. The company HUL, the EPS was high, but the cash flow per share and the free cash flow per share, it tend to be lower. Okay. Cox and Kings, a classic example. The company had huge debt of 15 million crore dollars. बहुत debt था company के पास. And the company was into losses. How did it show a positive EPS? How is it possible? The company was into bankruptcy. But when someone looked, or the investor looked at the cash flow per share, that was negative. So that's the true state of the company. भारती एयरटेल, कैश फ्लो नेगेटिव है, बट दैट डज नॉट मीन तो कंपनी में इन्वेस्ट नहीं करोगे. You need to see other factors as well. Bharti Airtel is a classic example. Some of the companies have a negative cash flow. You have to analyze why. Bharti Airtel is one of the strongest players in telecom industries. Bharti and Jio I'm talking about. Bharti का cash flow अपना ये negative क्यों है? Because whatever the company earns, it spends. कंपनी अपने पास कुछ नहीं रखती. It spends on laying down towers, lines. You might have seen the advertisement on TV. Airtel is busy in laying down the towers or the lines every 5 minutes all over the country. सब मतलब areas में and villages में and rural areas में it is laying down lines. 5G spectrum, 6G सब कुछ कर रहा है. So the telecom business is as such. Whatever it earns, it has to spend. So most of the time the companies are into losses with negative cash flows, but these companies always have a good prospect. Because again, if Vodafone Idea goes off, people call it a duopoly of Jio and Airtel, we all know. The PEG ratio tells you how much the company can grow in future. PEG is basically the share price by EPS by the growth rate of EPS. मतलब EPS कितने रेट से बढ़ रहा है, right? Again, this indicator might not be a very good indicator. Because अगर यहाँ पे EPS is increasing by 25%, then by 30%, and in the fourth year we estimated कि 30% से ही बढ़ेगा, ठीक है? But it might not happen. मान लो कि the fourth year is the COVID year, then the growth rate might fall down to even negative. So PEG ratio is not a good indicator, which I believe for the future projection, but still it is quite widely used. Then talks about the EV to EBITDA. EV to EBITDA is something which takes into consideration both equity and debt of the company, right? In case of PE ratio, we just have equity. But when you have debt, you need to value the company on the basis of EV by EBITDA. Then PE ratio पे ध्यान देना, but इतना ज़्यादा नहीं. Okay. So EV by EBITDA ratio tells you how much the company is able to earn back. अगर company में if someone has invested into the company, how much it is able to flow back, अपनी investment पर उसे कितना पैसा वापस मिलता है. So EV to EBITDA is a measure of the payback period as well, which tells you in how much time you'll be able to get back your investment. Okay. And EV by EBITDA is a classic indicator for the startup companies because उनका net profit and EBIT is negative. So people look at EBITDA, which is nothing but the earnings before interest, tax, depreciation and amortization. मतलब interest भी नहीं करा subtract, टैक्स भी नहीं करा सब्ट्रैक्ट, डेप्रीसिएशन भी नहीं करा सब्ट्रैक्ट और एमोर्टाइजेशन भी नहीं करा सब्ट्रैक्ट. ओके. सो टॉकिंग अबाउट द इक्विटी वैल्यू एंड मार्केट कैपिटलाइजेशन, सॉरी, enterprise value and the market capitalization. So the market capitalization, it is only the equity of the company or the free floating shares of that company, whereas the enterprise value, it contains both equity and debt. And a lot of things I've heard in the market, when people tend to buy the company, they buy the company on the basis of market capitalization because it tends to be cheap. Because उसमें बस shares होते हैं company के. But when someone buys that company, that person later realizes कि company के पास तो debt भी है and अब debt payment भी करनी है. So when you are buying that company, always buy the company on the basis of enterprise value and not market capitalization. Okay. Then talking about the dividend payout ratio, it is nothing but how much dividend you are paying from your net income. And talking about the dividend yield. Dividend yield is quite interesting. It says how much dividend you are paying out of the current market share or as per the current market price. A simple example, अगर मान लो कि 10% का dividend declare हुआ है या हाँ ठीक है 10% का dividend हुआ है declare. Okay. And the share price of that company is 10 rupees. Like currently. So that does not mean the company is giving whole dividend. 100% dividend मिल रहा है. The dividend would only be paid on the face value of that company. Face value मान लो सिर्फ 1 रुपए की थी. तो जो dividend मिलेगा 10% का वो current share price पे नहीं मिलेगा जो आज 10 rupees है. वो फेस वैल्यू पर मिलेगा जो 1 रुपी है. So you need to have this thing very clear that the dividend is always paid on the face value and not the current market price. And dividend yield tells you how much over the years the company was able to pay off as dividends. Okay. एक current time पे नहीं बोल रहा, over the years how much the company was able to pay as dividend. Okay. Then talking about like some of the models in very brief, though with the limited constraints we cannot manually solve it, but I will subsequently try in the further sessions if we have some time. We'll manually solve like some of the questions of DCF and some other methods as well. So talking about the DCF analysis or the discounted cash flow analysis, so it's a part of the income approach in valuation. So it helps you to calculate the intrinsic value of the stock. That is nothing but discounting the future value of the stock in order to have a present value. Or let's take a simple example. You try to project the cash flows of the company in future. आज जो कंपनी के कैश फ्लोज हैं, you try to project the cash flows in future and you discount those cash flows. Those who have a good knowledge of finance, of BBA, BCom, and MBA people I'm talking about, okay, they have an idea how to discount the future cash flows at a present rate. So discounted cash flow अगर हम सिंपल भाषा में बोलें, ये एक ऐसा मेथड है, आगे जाके अगर आपको 100 करोड़ मिलने हैं, okay, so how much you have to invest right now in order to get that 100 crores. Okay, उन 100 crores की आज की वैल्यू कितनी है? That DCF analysis tells you. Okay, and that is the basic method. Like for example, if I tend to project the future cash flows, मैंने सोचा in the next year, I named it as year 1, I'll have like 5,000 rupees, then 6,000 rupees, 8,000 rupees. I discounted it with the interest rate. ठीक है, जो मैंने सोचा कि 8% इंटरेस्ट रेट पे तो मतलब कि मेरा पैसा बढ़ेगा या 8% इंटरेस्ट रेट पे मेरे कैश फ्लोज बढ़ेंगे. People who do finance, have a BBA, MBA background, they have the knowledge of the weighted average cost of capital. So this interest rate is also called the discounting factor, or it is also called the weighted average cost of capital WACC. And when you like divide it by the interest rate, you get the present value of the future cash flows. And this is the sum of the present value. And this is the amount that you invested. And obviously the amount that you get at a later period of time should be more than what you invested. Simple. अगर हमने invest करा है, so we want a higher rate of return or higher amount, that's it. 20 rupees invest करा है, 30 चाहिए. 30 करा है, 50 चाहिए. या 20 invest करा था, we got 23992. So 3,992 का profit हुआ. Okay. So we talked about the free cash flows. ये हमारे सब free cash flows थे. The terminal cash flow is nothing but the last cash flow of year 5, that is 4,000 rupees. Your discount rate is nothing but the interest rate, which we are discounting for year 1, year 2, year 3. And the internal rate of return. See, IRR, it is, though like we do not have much time to calculate it right now, but IRR is nothing but how much overall return you are getting from your investment in simple terms. In finance के terms में हम बोल सकते हैं that is the rate at which the net present value of all the cash flows is zero. But वो term अभी बहुतों को नहीं आएगी समझ. तो IRR, just make note of one thing. It is the final return that you are getting from your investment. Simple. Okay. Then in the capitalization approach, so like this approach is basically used for those companies which have a steady growth rate. मान लो कंपनीज हैव बिकम मैच्योर एंड आगे उनका लाइक ग्रोथ रेट आगे रेट से नहीं बढ़ने वाला. ओके, द कंपनीज आर क्वाइट मैच्योर एंड लाइक दे आर एस्टैब्लिश्ड एंड लाइक दे विल ग्रो विद अ स्टेडी ग्रोथ रेट एंड a growth rate will not increase. So in this case we use the capitalization approach and we use the geometric mean का formula. This R is the steady rate of growth and N is the time period. Okay. So capitalization approach is basically used for those companies which are mature companies and those have a steady growth rate now. कि आगे उससे ज़्यादा वो रेट पे नहीं बढ़ेंगे. Talking about the market approach, like which is the next approach, we have the most famous concept of the relative valuation. Relative valuation or market approach. It's one and the same thing. Okay, in relative valuation, we are trying to compare our company with some other company. Okay, so let's take a classic example of college Dekho. Okay, if college Dekho is trying to progress in future, is trying to gain the market share, it will try to compare its own organization with the other organizations in the same place. If there is some established player in the market, if there is a listed player in the market in the education sector, okay, and college Dekho company also wants to get listed in the market. So the college Deco company is unlisted, whereas the companies which are listed in the education sector. So if our company wants to get listed in the market, we'll try to compare our company with those companies which have been listed in the market, right? We'll try to analyze their statements. हम देखेंगे 5 6 7 साल में उस कंपनी का ग्रोथ इतना हुआ है, तो हमारी कंपनी का भी क्या 5 6 साल में एवरेज ग्रोथ उतना तो होगा ही होगा, बट वी हैव टू लाइक परफॉर्म बेटर. So it helps you to get an analysis. It helps you to compare a company with the other company. It is also used to price the IPOs, right? Because the IPOs, like, matlab ki before the IPO, the company is unlisted. Okay. So the unlisted company is compared with the same player and within the same industry. अगर किसी आईटी कंपनी को लिस्ट होना है, लाइक फॉर एग्जांपल माइंड, तो Mindtree will compare itself from Infosys or Wipro, though it is मतलब कि now listed now, but जब listed नहीं थी तो it might have compared it. Your like food chains, be it your Devyani International or various other chains, like they might compare themselves with like Jubilant Foodworks, okay, like which are listed. So इसमें कुछ measures हैं. Price to earning we talked about, PB हमने बात कर ली, हमने like dividend yield बात कर ली, EV/EBITDA बात कर लिया. Price to sales is nothing but if the company is not making the profitability. अगर कंपनी के पास प्रॉफिट ही नहीं आ रहा तो एनालाइज द कंपनी ऑन द बेसिस ऑफ रेवेन्यू और द सेल्स, बिकॉज स्टार्टिंग में द कंपनी वोंट हैव द प्रॉफिटेबिलिटी बट सेल्स होंगी. तो सेल्स के बेसिस पे हाउ मच द पीपल आर विलिंग टू पे फॉर दैट कंपनी. ईवी बाय रेवेन्यू सेम, कि रेवेन्यू के बेसिस पर हाउ मच द पीपल आर विलिंग टू बाय दैट कंपनी. ईवी बाय एबिटेटा, आर एक्स्ट्रा है, आर इज फॉर रेंट, इसका मतलब है कि रेंटल एक्सपेंसेस देने से पहले अगर हम सब माइनस कर दें, mostly we'll have the revenues only and some certain expenses. So like before all this, how much the investors are willing like to buy that company before making adjustments for interest, tax, depreciation, amortization and rent. EV by invested capital, इसमें पूरा अपना ये पे बैक पीरियड का जाता है कॉन्सेप्ट, कि जितना पैसा कंपनी में लगाया है उतना हमको वापस मिल रहा है या नहीं. Where comparable company analysis is basically you are comparing your company with a similar company and within the same industry. IT को IT से compare करो, pharma को pharma से करो. Okay. Then mergers and acquisition transactions. So that is just for the mergers and acquisitions के लिए अपना ये valuation बहुत like it is helpful. Like if you want to buy a company or acquire that company, so firstly you'll have to value your target company कि हम कितने में खरीदें. So that is important. Third approach में we talk about the relative valuation approach हमारा हो गया. Then we have the cost approach. In the cost approach, like it is also called the asset-based valuation. In this we have 4 methods. We have the book value, the adjusted book value, the liquidation and replacement value. So when we talk about the book value, it is just the historical price of the assets. Assets को खरीदा minus the depreciation is your book value. Okay. So all the companies are purchased or the assets are purchased only on the basis of the historical value or book value, जो उनकी पुरानी value होती है. But in the adjusted book value method, the historical book value prices are adjusted against the market prices. मतलब उनको market level के prices पे लाया जाता है. ठीक है, जो current market price चल रहा होगा, they're valued on the basis of the current market price, तो changes करे जाते हैं. In the liquidation value, we tend to have, if the company is going into liquidation or the company is shutting down its operation, company बंद हो रही है, तो कंपनी को बेच के कंपनी को कितना पैसा मिलेगा, how much can the company be sold off. In terms of replacement value, it is basically if a company is replacing its assets or some important equipments with some other equipments or assets. प्लांट के बदले तुम एक नया प्लांट खरीद रहे हो, तुम किसी मशीनरी के बदले तुम नई मशीनरी खरीद रहे हो, तो कितने में खरीदोगे, उसकी रिप्लेसमेंट वैल्यू क्या होगी. सो रिप्लेसमेंट वैल्यू का मतलब ये नहीं है अगर मेरी लाइक 20,000 की मशीन है एंड 50,000 की मैंने मशीनरी खरीदी है, तो 50,000 रुपीज वुड बी माई रिप्लेसमेंट वैल्यू. Your value would be 50,000 minus the 20,000. ठीक है, एंड हो सकता है कि 20,000 की वैल्यू मशीन की ना रहे, राइट, वो डेप्रिशिएट हो गए, मतलब कि 5,000 पे आ जाए, तो वैल्यू वुड बी 50,000 माइनस योर 5,000, तो 45,000 would be the replacement value. Okay. So talking about the residual analysis, so this analysis is basically when the company has paid all its charges, सारी fixed obligations the company has paid, interest, dividend, सब कुछ, the final cash जो company के पास बचना चाहिए, that should be positive. It means the residual income of the company must be positive. एक सिंपल एग्जांपल इसमें लिया है, मान लो कि 1 लाख का प्रॉफिट है एंड इक्विटी चार्ज, ठीक है, इट इज नथिंग बट ऑल लाइक बेसिकली द कॉस्ट ऑफ इक्विटी और द रिटर्न टू द इक्विटी प्रोवाइडर्स दैट वी हैव पेड. सो आउटस्टैंडिंग शेयर्स पे वी हैव पेड द इक्विटी, द कॉस्ट ऑफ इक्विटी, ये आ गया अमाउंट. बट व्हेन वी सब्ट्रैक्ट 1,10,450 from 1 lakh, we get a negative 4,500. Okay, so it shows कि residual value कंपनी की नेगेटिव है, बट आइडियली द रेसिडुअल वैल्यू मस्ट बी पॉजिटिव. सारे खर्चे के बाद फाइनल अमाउंट जो कंपनी के पास बचे, दैट शुड ऑलवेज बी पॉजिटिव. एंड दिस इज नथिंग, सी दोज वर हैविंग डाउट कि इक्विटी चार्ज क्या होता है, दैट इज नथिंग बट योर कॉस्ट ऑफ इक्विटी को जब यू मल्टीप्लाई इट फ्रॉम द शेयर्स दैट द कंपनी हैज. Okay, that is the equity charge. Then we have some other methods. We have the precedent transactions method. So precedent transaction method is basically companies की past transactions को we see and we tend to predict our performance. मान लो if a company is going into the IT sector, right? A new company है, startup company है. So it will try to compare its performance with Infosys और Wipro. वो देखेंगे कि जब Infosys and Wipro just start हुआ था, तो वो कैसे कर रहे थे, वो कितना कमा रहे थे, उनकी अर्निंग्स कितनी थी. सेम लेवल वो देखेंगे अगर इन्फोसिस को दे आर कंपेयरिंग इन द इनिशियल 2 years, दे विल कंपेयर देयर ओन कंपनी इन द स्टार्टिंग के 2 years, कि क्या हम उतना प्रॉफिट हम बना पा रहे हैं या नहीं. इन्फोसिस स्टार्टिंग में जब भी आई थी, लाइक इन द ईयर्स ऑफ 19, स्टार्टिंग के 2 year में इफ इन्फोसिस हैड मेड अ प्रॉफिट ऑफ 2 करोड़, क्या हम 2 करोड़ कर पा रहे हैं या नहीं. Same they'll try to do with cash flows, expenses, the growth prospects, सब कुछ. So precedent transaction analysis is nothing. You're trying to compare your own company with some previous transactions which have been made by some other company within your same industry. And the last 4 methods are basically for the startup methods. For example, the venture capital method. It is basically how much the venture capitalists are pouring in into the startup companies. Okay, and startup companies को कितनी they are giving the value, because on the basis of that value, if the startup companies are able to create that value, on the basis of that future value, only these venture capitalists would be investing in those startup companies. So that is the venture capital. In exit valuation method में क्या होता है, these venture capitalists see, वो कहते हैं कि हम इस कंपनी में पैसा लगा रहे हैं with the intention of exiting that company in like 5 years, 6 years or 10 years. So in exit valuation method, they have a metric in their mind. They think कि इस कंपनी में हम 10 साल तक पैसा लगाएंगे and 11वें साल तक we leave that company. And leaving that company does not mean कंपनी छोड़ के चले जाएंगे. अगर इन्वेस्ट करा है तो अपना पैसा वापस लेके जाएंगे and full return के साथ जाएंगे. Okay. Exit valuation can also be termed as a company going for the IPOs. Because जब कंपनीज IPOs में जाती है, so a lot of venture capitalists also exit from the company अपने शेयर्स मार्केट में बेचकर. Okay. Then you have the Berker's approach. Berker's approach takes into consideration the 4 most important factors, that is investment, कि कंपनी कितनी इन्वेस्टमेंट कर रही है, उस इन्वेस्टमेंट से कितना रिटर्न मिल सकता है, कंपनी की मार्केटिंग कैसी है, आर पीपल लाइकिंग दैट कंपनी, हाउ इज द डेवलपमेंट ऑफ दैट कंपनी, उसकी डेवलपमेंट स्ट्रैटेजीज कैसी हैं, एंड एग्जीक्यूशन कैसा हुआ है. मतलब ऑल द इन्वेस्टमेंट दैट द कंपनी हैज मेड, इज द कंपनी गेटिंग अ फ्रूटफुल रिटर्न ऑन दैट, how is the marketing of the company, are people going to like that company or not, what are the development strategies and how are they executing it. So they put like certain weights on the basis of these criteria and they calculate the value of the company. मान लो कि 0.2 इन्वेस्टमेंट को दे दिया, 0.6 मान लो कि मार्केटिंग को दे दिया, 0.1 एंड 0.1 इन दोनों को दे दिया, तो वो देखेंगे कि लाइक इन्वेस्टमेंट कितनी करी है. इन्वेस्टमेंट में अगर लाइक 2 लाख स्पेंड करा है तो लाइक 2 लाख इंटू 0.4. मार्केटिंग में अगर मान लो कि 3 लाख करा है स्पेंड तो लाइक 3 लाख इंटू 0.6. एंड 1 लाख इन दोनों में करा तो 1 लाख इंटू 0.1 एंड लाइक 1 लाख इंटू 0.1, तो मतलब एक वेटेड एवरेज निकाल रहे हो तुम. ओके, बट द फर्स्ट शिकागो मेथड वो इन फैक्टर्स को तो कंसिडर करता ही है, इन्वेस्टमेंट, मार्केटिंग, डेवलपमेंट एंड एग्जीक्यूशन, बट इट कंसिडर ऑल द फैक्टर्स इन द कंपनी, ग्रोथ प्रोस्पेक्ट, प्रॉफिटेबिलिटी, कैश फ्लोज, जितनी भी फैक्टर्स हो सकते हैं किसी एक कंपनी में, it considers all these factors in first Chicago approach. Last four methods of venture capital, exit valuation, Bocuse approach, first Chicago are for the startup companies only. Okay. So, like before ending the session, I would try to emphasize on one point. See, the valuation of the company, like make note of one thing, it is only in the limelights of the market, or it takes into consideration the market conditions. Why a large number of IPOs they come when the market is rising, because at that time the market is going to be overvalued. Okay, and all the analysts who would be valuing that company, that is all the companies who are being listed in that high rising market, the value that the company would get would be very high. 26 times your original value, 30 times your original value, 100 times your original value, because at that time the market is rising. But when the market is falling, there is pessimism and not optimism. So at that time, the people would be like valuing the company at a very low, at a discount, because market में pessimism है. So valuation also takes into consideration these personal biases also. कि अगर market बहुत high जा रही है, तो maybe like the company might be valued at a higher price. But if the market is going too low, the company might be valued at a lower price. It might happen. So you need to ignore these biases as a perfect financial analyst and value the company on the basis of the constant market conditions, irrespective of like जो तुम्हें चाहे कुछ भी बोले, ठीक है, बट यू नीड टू एनालाइज द कंपनी ओनली ऑन द बेसिस ऑफ द फिगर मार्केट. मार्केट बढ़ भी रही है, तुम तब भी एक नॉर्मल करो तुम एनालिसिस. मार्केट गिर भी रही है, मेक द एनालिसिस एज अ फिगर मार्केट अप्रोच. डू नॉट ड्राइव योर पर्सनल इमोशंस एंड बायसेस. एंड पर्सनल इमोशंस एंड बायसेस की बात करी है तो वी हैव the topic of technical analysis for tomorrow's session from 7:30 p.m. onwards. We have technical analysis. Let's talk about all the behavioral aspects. Okay. So we'll talk about all these concepts tomorrow.